Hey everyone, it's Dan from Reliance.com, and today I'm actually going to be showing you my portfolio on the Hargreaves Lansdown platform, and I'll get into a few things why I've chosen this platform, my investments, and what I'm aiming to do whilst on here. So let's get started by looking at the May update. So to start with, as you can see, I actually am using a Hargreaves Lansdown stocks and shares ISA. You may be thinking, why am I using an ISA? It's pretty much to protect myself from tax. So if you have stuff in an ISA, you do actually limit the amount of tax you have to pay. I think it's down to 0, to be honest, on capital gains and dividend tax. But you can only put in 20,000 a year, which is a big thing for me. I'm not going to put more than 20,000 in. So at this current stage of my life, I don't actually have that kind of disposable income, so I'm kind of limiting myself to just put in a certain amount a month just to get that compound interest going. And my aim for this portfolio is to one day be able to live off the dividends. By that I mean I'm going to leave all the money in the fund. And then once I do get to retirement age of 60, 65, which I should have at my current rate when I was looking at the compound interest about 300,000, I could live on the dividends of 4% yields, which could net me about £12,000 a year-ish. But that's if I do choose to retire at that age. I could go on longer. And as I get older, I will be putting more money into the fund. I'll be getting to that in a little bit. So let's actually go and have a quick look at the funds I'm actually invested in, because why not? So the first fund I'm actually interested in is the Artemis High Income Fund. The reason I'm invested in this is because it's got a good yield of stocks. It is an income fund, which means it is a collection of different stocks and shares. It's not just one sole company like Tesla or Apple. I do that just because it's less risk. It means I'm going to get potential growth every year. On average, it's about 8% per year on the stock market, but that can change. I know with the pandemic, things have been up in the air. But yeah, that's the first one there. It pays monthly, and that's always a good one. I've also got an Eden Tree High Income Fund, which also is a dividend yield investment. And the reason I like that one so much is because, again, it is paid. It's paid every 3 months, I think it is. And it has got a good range of companies there. Same with the FTSE 100 and the Vanguard Fund, but they only pay every 6 months, I'm pretty sure. If you're wondering why I've got 2 FTSE 100s, I shouldn't. So I actually bought into the HSBC one first. I made an error, my fault. And actually put £100 in, and what I'm doing is I'm leaving that £100 in the account. I want to see how much potential growth I get. So far, I've actually made £11.97, and I'm still going to receive my dividend for that amount eventually anyway, so that's why that's there. But the Vanguard one is the exact same, but just lower in fees, and that's why I've actually gone with the Vanguard one. That's why I've got more money in there. It's just, I get better value on the Vanguard one, and money, when I'm actually doing a portfolio, is a big thing. And then I've also got the a yield bond, which is linked to inflation. So as inflation goes up, I'm pretty sure this bond will go up and it'll counteract that. And it does pay a dividend as well, which is the big thing for me. So before I actually get into the actual specifics of stuff in this portfolio, I want to mention that the reason I'm using Hargreaves Lansdown is because I like the UI. It's something I've used before with my pensions previously, and I know the user interface really well compared to like other platforms like Vanguard and Trading 212. I do think there is platforms which are cheaper, but it would be best to actually have a look into that yourselves, because I don't really know much about comparing the fees. All I know is that Hargreaves Lansdown is more than the competitors. I've never actually used Vanguard, I've never used Trading 212 or Free Trade or anything like that, but I know you can get better deals elsewhere. Also, Hargreaves Lansdown does charge for individual stocks, which is another thing for me. I'm not going to buy individual stocks. I don't want to get into stock trading. I want to get into index funds and exchange traded funds, which are funds which are traded on the exchange, like on the actual like stock exchanges and stuff. And that's why I've actually gone with Hargreaves Lansdown. It's just something which is easier for me. I've used it previously, and that's what I really like. So I want to go into some of my growth so far, because I think that's a good idea. So let's filter by money made. Okay, so my main profitable investment has been the Eden Tree Higher Income, where I've made £12.18p, which has been a return of £7. I've also got the FTSE 100, which I've made £12 from HSBC, the Vanguard £11, the Artemis £1.99, and the Bond £105. And I just think these are actually a decent amount. You know, it's steady growth, and like I said, I'm doing this for the dividends, so I am putting in money every single month to actually get this. At this stage, I'm only putting £125 into my funds at the moment. You're maybe thinking, why so low? I've literally just moved house. I've literally just bought this place, so I'm still trying to do this up. I'm also planning on buying a brand new car next year, and I'm also going to be getting married in a few years as well, so I've got quite a bit going on right now. After all that's done and I do decide to settle down and stuff, I will be actually putting more money into my stocks and shares ISA. But at the moment, I am just putting £125 in per month, which is about £1,500 a year. Of course, if I do earn any money on the side, such as with my side hustles, like with Swagbucks and stuff, which I do actually have a guide on my blog for that. I will actually put in more of that information, that money into the platform as well once I actually get all this sorted as well. So as you can imagine, the more money I make, the more I'm going to put in, which can compound and make more money, which is a big thing for me. So what I'm going to do right now is I'm actually going to have a quick look into the individual stocks here just to see what's going on, just to give you guys a bit of transparency on what to expect in these different stocks and shares, just so everyone's up to date, and just some more reasons why I've actually invested in these funds, because I think it's good to be a bit transparent when it comes down to it. Okay, so first off is the Artemis High Income Fund. As you can see, it has actually increased daily, but I'm actually going to go to the fact sheet. You can see my orders there, which is fantastic. Fact sheet, there we go. Let's have a quick look at what's going on here. So I really like this one because it does pay a monthly dividend. As you can see, the annual return has been pretty high this year. It's been 18% overall, obviously due to the pandemic last year. The stock market was at a massive low just to start like the last financial year off. As you can see, I do get a 4.55% dividend, which ends up being like 50p at this current point. It's not much, but it will actually start to spiral. So next month it might be 62p. I don't really know the specifics, but I know it is paid every single month, which is a big thing for me. It's actually investing in a lot of different companies. So it's investing in British Tobacco, the Adecco Group, the US Treasury. So there's a lot. And the thing is with this one as well, it's kind of split up pretty well. So it's like there's a bit in the UK, a bit in America, a bit in France. So it's not just solely based on one economy, which is a big thing for me. And that's another thing I really did. And as you can see, it is a lot in bonds. So if you don't know, with bonds, it's a lot more secure. You do get a lower interest yield. But if it is paying a dividend, I'm fine with that. Let's go to the next one, which would be the Eden Tree. Let's load the fact sheet again. If you do why I go to the fact sheet, it's just easier to get to, and then it's easier for me to describe my knowledge and stuff. So the Eden Tree is actually seeing wow, I didn't know that. A annual return of 28.25%. There is some fees here. As you can see, there is some ongoing charge of 0.35%, so something to be aware of. And the dividend is paid biannually, so that's twice a year, and it's only 3.6%. It's not too bad. And the best thing about this one is it focuses on a lot more of UK companies, if I remember correctly. Yeah, so it focuses on 54% of UK companies. Fantastic, fine by me. And it is kind of mixed up. It's not just bonds, it's pharmaceuticals, equity investment, banks, life insurance. And as you can see, there's quite a few big names here. There's GlaxoSmithKline, Smith DS is the printing company, Legal & General, British, Dutch Shell. A lot of people are a bit hesitant about investing in like Shell and other gas-based companies just because they don't know what's going to happen with the whole like environmental side of stuff. But I think it's a good move because obviously they're going to be slowly shifting towards like more. They're going to be shifting more towards like renewable energy. But yeah, that's currently this one. I've currently not as much as I like in this fund, but I am slowly investing more into it. Go to the next one, which is the HSBC FTSE 100, which again, like I said, I'm not investing anything in, but it has actually had a good yield overall, which is 25.37%. And as you can see, the ongoing charge is 0.09. A quick note here, it is paid biannually, and the dividend is 2.86. So it is pretty low, but you know, money is money when it comes down to it, which is the thing what I'm doing this for. It's a big thing. So the first stuff you'll notice here about some of the companies which has been involved in this collection is Unilever, AstraZeneca, HSBC, again GlaxoSmithKline. There is quite a bit of parallel here because this is very much focused on the UK again. It is a focus on the top 100 companies on the FTSE stock exchange, so that's why it is that. And you should see a massive range here as well. It is understandable. But yeah, let's have a quick reminder here. So that's 0.09. Let's go to the next one, which should be the... Oh no, I want to go to this one first before we go to the bond, the Hargreaves Lansdown one, just to show you the fees as a comparison. So this is 0.6, 0.06 even. It's not much, but that could make a massive difference. Like for example, if I'm going to invest in the same companies, which I will be here, that's what I'm going to do. You know, and I kind of want to limit my cost and try to maximize my return in a way. I know, like I said, some platforms do offer better deals, but for me, this works fine for me. You know, I'm happy with paying that. And as you can see, it actually has as a 26.62% return, and the dividend yield is 3.89, which is pretty good. And again, it is invested in the exact same companies. Yeah, there you go. There's not really too much there, and this is just fully solely focused on the UK market again. It's the FTSE 100, which is the big thing for me. And yeah, overall, it's looking good. I'm really enjoying this fund. And finally, my last fund is the London Sterling Extra Yield Bond. Okay. So as you can see, that I do pay a 0.4% fee on this. It happens, but it has actually seen a massive increase of 17.68%. It is a 5.57% yield on the dividend per annum. And that means I'm going to get paid every quarterly as well, which is fantastic. And I'm actually due one coming up at the end of this month, which is going to be fantastic. I'm looking forward to seeing how much I get from that. And yeah, as you can see, it's invested into a lot of different companies here. It's all around the globe. So it is mainly in the UK, but as you can see, there is some like French-based companies there. There's obviously Santander, a UK-based firm. But yeah, overall, this is actually a decent one. I actually really don't know much about it, but all I know is I want to get into some kind of bonds just to make it so it's a bit, so I can match inflation in a way, which is why I actually went with this one. But yeah, I want to mention something here. All of my funds are dividend paying, and there is an alternative on Hargreaves Lansdown, which is called the accumulation funds, which are right here, and it's on all of them throughout the entire site. So there's another one here. And if you don't know, the difference is with accumulation, when you are paid dividends, it will go straight back into your account. But when I actually get paid my dividends now, it will literally just go straight into my wallet on Hargreaves Lansdown, which I'll show you right now. So let's go back over here. So it should be in, where is it now? I think it's income, or is it cash? One of those two. Yeah, so here we go. So we can see my money I've actually earned so far. So in April I earned £2.09, and in May I've earned 37 pence so far. I'm pretty sure you can click into these. Oh, you can't. It just shows me. And I normally use the app if you are wondering. But as you can see, like, these are some of the actual investments I've actually received my payments for. So I've got the Eden Tree, the Artemis on a monthly basis. So I gained 36p last month for the Artemis, and this month I've actually gained 37p. So it is slowly getting there with regard to spiraling. It will take a bit of time. Obviously, when compound interest starts coming up, it will start to go even quicker. I also want to show you something else here, but I can't remember how to get there. So I've got my monthly savings there, which is, like I said, I'm putting 125 in a month, which is fantastic. I'm trying to have a quick look. Is it in account administration? Okay, I also want to mention something else really quickly before I get down to the next part of the video. So if you go to the amount to invest by clicking here, you can actually see that you do get a loyalty bonus for how long you hold certain funds. And that can be reinvested back into funds once you actually hit, I think it's £10. I could be wrong. I think that's correct on that. And I also want to show you one last thing, so I'll just be one moment whilst I find that. Okay, so I'm back. I just want to show you something here. So I'm actually on the account settings, which is under my account, my account settings and withdrawals. And you can actually choose here whether to choose to keep your investments on the platform, withdraw them to your bank account automatically, or automatically reinvest, which kind of makes it a bit like accumulation in a way. So I've got it set down as automatically invested. I've actually got my group SIP, which is my private pension, held in my account. No idea why, I just have. It's one of those things. But with my investments, especially in my portfolio, I am currently reinvesting everything I get. Oh, but yeah, I think you have to earn about £5 if I'm correct to get that done. But so far, I haven't reinvested anything. But once I do, I will start to get some compound interest. And I'm going to show you my compound interest calculator and what my predicted earnings are at the moment. So just give me one moment. So, okay, I'm just currently on a compound interest calculator here. So I'm going to show you what my aim is. So let's start off. So my initial deposit is going to be 0. My initial interest rate is going to be 8% per year. And that's the actual standard amount of interest, well, percentage increase a stock would receive over a year period across 30 years. So sometimes it can be more, sometimes it can be less. But yeah, that's how it is. So imagine I'm going to save for 35 years, which will put me to around 65. And then if I put in 125 beginning, let's calculate. So that's how much I'm putting in right now. And let's see what I should have. So as you can see, and then it's just going to spiral out of control. Then eventually after 35 years, I shall have around 288,000 at the current rate. But if I do increase my deposits up to 250, which is what I'm going to aim to do over the next about a year and a half, 2 years, once I actually get my car, my wedding sorted, that's going to be the next thing for me. I should end up with around 600,000 by the age of around 60 or 65, which is pretty good. And as you can see, the interest you do receive starts to massively increase year on year. So as you can see, my total increase from that to that is about 40,000. So as you can see, it does actually increase, and that's the last 2 years. And then the longer you do leave that, the faster it'll go. And that's a big thing for me. I really want to be able to retire and then not have to worry about money and have my pension and have this in place. And yeah, so if I put this up to 4 years as well, as you can see, it does start to go even quicker. So I'll be getting 62,000 a year, and that's if I do touch it, you know. And then obviously, as compounding does start to get faster and faster, you will achieve that quicker and quicker. But if I do decide to be a bit crazy and put 500 in, which I'm not going to put £500 into the stock market, no, not at this current stage, maybe in the future once my mortgage is paid off, but as you can see, you will end up with about 1.7 million in 40 years time. And in the last few years, that's when you will start to get quicker and quicker. And it would only take me 36 years to hit a million, which is always good. If I did put £500 in, I'm not going to do that, but you know, I do hope one day I can become a millionaire. But yeah, that's my first ever portfolio update. I hope you've enjoyed it. It's been a bit interesting. I've kind of shown off my portfolio. It's not really going to change on a month to month, but I just want to show more about it, show you my dividends, show you what I've actually been doing in the eco space, really. And yeah, if you do want to get if you want to sign up for investing, it's always worth doing. Have a look on YouTube and stuff. I'm not a financial advisor. I don't really know. Like, I do my own research and that's all I know. Don't copy someone online, you know. Spend time, do your research and see what works for you. See what you think and just go from there, really. But that's my current view on it. I ain't a financial advisor, like I said. I'm doing this just because I want to create an option so I can actually have some kind of income in the future when I do retire. But that's my real aim here. What's your aim? Tell me in the comments below. But yeah, I've tried to do something a bit different here. I will be doing this more often. I'll probably be doing this on a monthly basis. So at the middle of the month, you'll see one of these videos. But yeah, thank you so much for your time, and I hope you stay safe and have a good day. Peace out.